Hey everybody, welcome in. Today we're going to talk about a common question that you guys have all asked: how I pick stocks, how I pick bottoms, and what is my process, and where do I get my research. So today we're going to cover all of that. So without further ado, let's jump right in. First of all, none of this is investment advice, just educational and entertainment purposes only. And of course, you'll see here that I use a lot of numbers, a lot of financial analysis, some mathematics, and some technical analysis as well. And please stay tuned till the end for the conclusion as usual. So first of all, the most important thing is to understand who you are. And a stable temperament is always best for an investor, when you can pull away that emotion and not get too involved with what you are investing in. Now, there's a whole bunch of different types of personality types out there, and I am actually working on a video that maps styles to personalities, trading styles to personalities. So stay tuned for that. That should be ready hopefully sometime next week, but I got to go into a lot of the psychology aspect, and that takes some time. The other thing that I want to share with you all is there are different types of investing. So there are the scalpers. They are the basically day traders who drink a lot of coffee. They trade by the minute. Then there are the day traders. There are the swing trading people that swing from week to week. And then there's the position traders and the investors. So I play in terms of position trading and investing. I invest for the long term, and I will wait sometimes a year, year and a half to either hedge my position or get out of my position or cash out or whatever else. So I'm very, very patient, and I play the long game, because after 30 years of doing this, the more time you have, the better your probabilities are. And I'll talk more about that in a little while. So the first thing that I like to do is pick the space where you want to invest. And right now, I like the space that is basically disruptive innovation. This is very similar to what ARK Invest do as well. So you look at things like enabling technologies or very innovative business models or value networks. Think things like Facebook, etc. Also, other categories obviously could be clean energy, along the lines of what Tesla are doing. And of course, what we're going to talk about today is the genomics space. So one of the reasons I'm very interested in this is Steve Jobs, a big fan of his. And he said the biggest innovations of the 21st century will be the intersection of biology and technology. And that whole field of what I refer to as personalized medicine is going to be huge. The things that they are able to do nowadays, especially with the C-19 pandemic, to be able to create vaccines in extremely short windows of time is staggering. But the reason a lot of that's possible is the technology behind it and the drug development. And when it comes to things like cancer and other things, the only way forward is personalized medicine. And that's why I'm personally very interested in this. So what we're going to talk about today is one of the examples of the space I follow. Obviously, I have holdings on things like Tesla and crypto, etc., which are also very disruptive. But genomics, we're going to tuck into a little bit today. So first of all, when you pick your space and you pick your sub-element of that space, you've got to find the leader. So today, I always like to bring in real-life examples. Today we're going to talk about Invitae, and they are the market leader in genetic testing. And there are many reasons why that's interesting. I'll talk more about them as we go through. But first of all, this company has been growing at full speed over the last 5 years. They've making very heavy R&D investments, which is hurting profitability. And that's an important thing, because I normally like companies that have profits or have a line of sight to profitability in a short window of time. These guys don't have that, but what they do have is vertical integration along the lines of Tesla. In fact, people call them Tesla of the whole genomics area, which is very, very interesting. So my thesis as well, why I believe Invitae is very important, is cancer, obviously, between 30 and 40% of all humans will be touched by cancer in the world. It's a massive area, but the old ways of treating cancer simply don't work. You know, the surgery, the chemotherapy, the radiation, It's just kind of like blunt force trauma to the body, and it really doesn't solve a lot of problems. However, the key to cancer is to be able to identify it early and treat it early. And you could do a lot of that with genomics. And that's why I believe it's one of the many areas where there's a lot of opportunity here. They're also planning a whole bunch of other tests, genetic tests that can actually prevent long-term illnesses like sickle cell disease, diabetes, and so on. So there is no limit to the need for this technology that Invitae has. So let's look at the investors. So the investors in Invitae are some big names. Obviously, ARK Invest, they own a truckload. They own about 14% of Invitae. And these folks are no dummies. Then you've got some other big names in there as well, like BlackRock and Vanguard. Again, also very, very smart investors. So it's important when you look at a company to find out who is investing in it and exactly what's going on. In addition, you got to look at the financials. I know for some of you this might be boring, but I pull down all the different financials and I run them in a model and I analyze them over time to make sure there's no radical changes. And again, this is not a perfect company from a financial perspective because I don't have line of sight to profitability, which is something that I do need. But what I do like are a couple of things. One, and I highlighted them here, it's optionable and shortable, which means I can hedge my risk. The sales growth quarter over quarter is very, very good. The gross margin is nearly at 30%. And again, they're just beginning. Their annual growth rate is between 40 and 60%, depending on which year you look at. The institutional ownership is 82%. The price target for the next 12 months is $54. And I'll explain why that's important as well. And it's 35% off the 52-week high. And there's a whole bunch of other information here as well, but I just want to call some of those key factors out that are kind of important. Now, when I talk about understanding the space, it's very important that you don't go into a space that you don't really understand. I always go back to Warren Buffett understanding Coca-Cola because it's a drink. Or Peter Lynch, he understands Dunkin' Donuts because it's a donut and he believes it's a recession-proof business. Now, from my perspective, I understand things like search, Google, and I own Google. I understand cars, like Tesla. I own Tesla, not only the stock, but also the car. But I don't know anything about gold mining in Africa. And I know a little bit about genomics and cancer from some family history and a personal passion for that whole space. So I've been looking at it carefully over the last 10 years, but I am no physician, I'm no medical doctor, I'm no PhD or anything like that, but I just know enough to be dangerous. And I understand the elements for the future of personalized medicine and where it's all going. So the key message here is don't jump into an area you don't understand. So if you are a rocket scientist, yeah, SpaceX, you can go research that, you'd probably do very well. But if you're not, it might be harder to understand. So just, it's an old rule of thumb that many people have used. The other thing I like to look at is analysts and analyst trends. So how many are pushing the purchase of this to their clients? Strong buys, holds, underperform and sell. So if there's any orange, like underperform or sell, I have to dig into that and find out exactly why, because that would be a red flag. But this one is good. The trends are down a little bit. There's not as many investors pushing it as a strong buy as there were back in November. But that could come back. And one of the reasons is they did raise some money by issuing about $400 million worth of stock. So there was some dilution for shareholders. But, you know, now they have enough money and runway to carry them for the next 3 to 5 years, which is also good. The target that I showed you in the financials as well is very important to understand what the one-year analyst target is. And in this case, across 7 different analysts, it's about $55. Now, the reason that's important is imagine the stock is at 60 and all of the top analysts are saying the one-year target is $54. You wouldn't necessarily want to buy it. It would be too high. So I think that's a very, very important factor to look at. The other thing that's also very important to look at is to ensure that they have a moat. And this is basically, think of an old castle with water around it full of crocodiles and sharks and all sorts of nasties to protect the business. And there's a whole bunch of different ways in which a moat can be identified. One is they need to have some type of innovation, which Invitae does. Second, they need to be kind of a first mover. They're not necessarily the first mover, but they are the best mover. Third, they are developing standards. And fourth, they're building network effects by integrating with many different partners and making some very strategic acquisitions. And fifth, finally, is data. Data is the most important thing. It's like the same way Tesla is valued is because of the miles driven and the data they're analyzing in their AI computers. Same thing here. These guys have analyzed millions and millions of genomic samples and tied them back to chronic diseases at different stages. The value of that data over the last 5 years is the value of this business. And that is their moat. It's very difficult for another company to catch up and play with them. The other thing that I like to look at is insider selling. Make sure there's no insiders selling or dumping a lot of stock. In this case, nobody actually has sold any stock since December. So that's a very good sign. And the people that did sell only sold small amounts. Sometimes people need to support living expenses. They may need a new car or a vacation home or vacation even, whatever the case may be. Sometimes insiders need to sell, but if you see all the insider selling, like the CFOs especially and the CEOs dumping stock like crazy, like a big chunk of their shareholding, that means they've got no faith in the future price. It's like people selling Bitcoin at 40,000. That means they have no faith in it going higher to 60 or 100,000 in short order. Now, let's go to another piece that's very, very important. It's technical analysis. And I look at a whole bunch of things for this. First of all, I get triggered by my systems when stocks hit certain areas. So I have a short list of targets and I analyze carefully. And when they do something, like when they fall through a 200-day moving average, a little alarm bell goes off on my computer and my phone. And that triggers me to go in and research it immediately. And that's exactly what happened today. So Invitae this morning, I think it was about 8 a.m. Pacific, it broke through the 200-day moving average. So my alarm bells go off and it's like, what happened? Then I start digging into the reason why it fell. Have the fundamentals of the business changed? I check all the news. I check all the followers. I check the analysts. I check Twitter. I try to find out exactly what's going on and make sure there's no fire from this actual loss. The second thing I do is I look at some other technicals, and I cover some of these tools that I look at within Patreon, but RSI and MACD. And when they are both signaling buys that haven't existed for an extended period of time, like a 6-month window, that gives me more technical confidence to be able to jump right in. So I have 3 big check marks. One, below 200-day moving average is positive. And the RSI and MACD are very close, as well as stochastics and a whole bunch of other stuff. So everything was ticking all the boxes. It all seems good there. Then I dig into the news and find out why the stock is falling. And I read, well, they had earnings. Even though the revenue beat, their profit didn't, which of course their loss was bigger than I expected because they don't actually make a profit yet. But the other reason it was taken down is the whole biotech sector, genomic sector has been weak with the weakness in the market. A rising tide raises all boats, but the opposite is also true. So everything has gotten clobbered over the last couple of weeks, as we kind of well expected. So no cause for concern on the news side. Now, one other concept that I like to go into. So we have everything checking out okay, but let's go a little step further. And of course, the old adage, the early bird catches the worm. It's nice to get into a stock at a good price, but also look at some other things. So, for example, the price of Invitae is now at $40. But if you zoom out, you'll see that that's only a 1x in 5 years from its IPO price. And they've been growing exponentially. They've been refining their technology. They've been gathering data. They've been building a moat. This company is a lot more valuable than it was 5 years ago, but it hasn't really moved. So big question is, does this remind you of something? And basically the exact same thing happened with Tesla. It was a 1x for a long time after its IPO. And then it went straight vertical with an accompanied short squeeze. So Not saying this is going to be the Tesla, but people do refer to Invitae being the Tesla of the genomic world as well. So, and of course, Kathy Woods is a big fan, and she's wonderful. So that's what I mean by getting early. Now, the other thing, another piece of my discipline, is to know your exit before you enter. Now, if you look at this chart very quickly, you'll see that early December, Invitae was over $60, and in January, it was over $60. So twice in the last 3 months, it's been over $60. Right now, today it fell down to about 37.75, 38. I got in at about 38 3/4, and I made a real-time alert to people on Patreon as well that I was buying and shared some of the strategies of what exactly I'm doing. But my goal is to ride this up to $60. My thesis is I expect Invitae to be back at 60 within the next year, at least. It might happen a lot sooner, but that's how long I can wait. And I have options positions that go out way further than that. And that's always part of my structured analysis and thesis when I go into a trend. Okay, conclusions real quick. As usual, every one of my videos will have a set of conclusions. So the first one is to pick your space, pick your industry, whether it's autonomous vehicles or clean energy or genomics, and make sure you understand it. Find the leader in that space, make sure they have a moat, and then wait. Wait for your entry point. Also make sure you're up to date on their financials. Make sure you know who their investors are. Like in this case, ARK is a big investor, BlackRock, Vanguard, really, really good names. Check the analyst position on the actual stock. Make sure nobody's telling people to sell it. Make sure there's no downgrades. Very important. Check the annual targets. Like I said before, if the stock is at 60 and the analysts expect it to be at 54 in a year's time, it might not be a good time to buy. Check if the insiders are selling. Check the news if there is a fall, and then find out the reason for the news. Make sure it's nothing that is really bad for the company that you don't know about. You need to uncover everything. And then check the technical analysis, all the indicators that I typically use, like we went over. And of course, know your exit before you enter. Very important part of the discipline. And it helps you really wrap your head around getting into positions. Second conclusion, very important. Be patient. When you analyze your space, you analyze your targets and your entry points, just wait. Opportunities present themselves all the time. You just need to sit and be patient. And if you're looking at, say, 10 stocks, in any given 2-week period or 4-week period, something's going to hit. Something's going to go down for a reason, and then you have the chance to jump in and get into a position. And the third part, very, very important. This is investing. This is a blood sport. This is dangerous stuff. Be prepared to lose at all times. There's no such thing as get rich quick. This is not an easy game. Remember, for every winner, there's a loser. You're up against a machine. You're up against a hedge fund. You're up against another trader. So just be very careful and go in knowing that whatever you invest, you could lose. Again, not investment advice, but just be very, very careful and make sure you are aware of that, okay? Patreon, big thank you to the Patreon community. You guys are incredible, and thank you for everything. And finally, if you like this content, hit the like and the bell and subscribe. Appreciate all the comments below. Watch for the scammers. And if there's anything else you want to learn, if you want me to go deeper into a certain area, like more into technical analysis, more into financials, more into the tools I use to pull all this information together, how I look at my short list of stocks, drop a comment below and I will answer that in the next video. Thanks, everybody.